Good evening, everybody. Good afternoon. Sound check. How's the sound, everybody? Everybody give a nice, warm DTS welcome to your host. Let's get right to it. This is going to be long. I always think like I'm running short of material, and then I always run over, and I was thinking that. And then this afternoon, I added a whole bunch more slides. So I guarantee you we're over, and I don't like going past 6. So I'm going to have to talk really fast and go through this really quickly so nobody really understands anything. No, we'll go through it as we normally do, but a lot of info, so let's get going here. Some of these I dub educational training events, meaning that they're all educational. You know, none of these are sales events. I mean, not directly. Hopefully you like what I say or you like what I'm teaching, and you know, someday you join us in the room or you take a seminar program or something, but that's up to you. I really don't care. But I try to impart some good education on everything. But some of these cross the line to being things that I actually, you know, would absolutely require all my seminar students to hear. I'm going to mention this again later, but I got this question in the email yesterday. It's kind of like somebody was very impressed. They went through a lot of the free stuff pages and they go, my gosh, Paul, there's so much stuff out here. I mean, it makes me wonder, what do you teach in the seminar program if you're giving all this information away for free? I just want to emphasize, the seminar program is teaching technical analysis. There's 3 classes of that. And if you memorize everything on the free stuff page, maybe accidentally I slip over on something, but you're not going to get 5% of the information. This is all ancillary stuff or basic stuff or whatever you want to call it. It doesn't really touch on anything. So if you're impressed with what's here, I mean, that's great, but I mean, it has nothing to do with actually making money. It's all indirect. Today is a borderline thing where I'm really going into things that, you know, are in essence part of, you know, should be part of any seminar program. They're not from the seminar slides, but they're things I talk about, and I think they'll be very helpful to you. This really does relate more to day trading. Again, I'm both a long-term investor. I have a long-term letter for those of you interested, and I'm a day trader. And the concepts apply long-term theoretically, but directly you may not get that. Directly, this is going to be much more related to day trading. But whether you like to day trade in more of a scalping style and just be in stuff for minutes, or whether or not you like the morning, or whether you like to stay in stuff all day long, like I more or less do, whatever it is, it doesn't matter. This absolutely positively applies to you, and it's probably in the category of a topic that can help eliminate a lot of your mistakes. And the reason this is so probably extremely helpful for some of you is because these are mistakes you may not even know you're making. You may not understand. If you're not really trained in technical analysis, it's hard to go back and look at your trades and say right, wrong, good, bad, right? Do you all agree with that? And many of you are trained and know what you're doing, but if you're struggling, you have those break-even blues. If you feel like you know what you're doing and you're just not quite making money yet, to me, the hardest thing in the world about teaching yourself is that after you take a bunch of trades, you go back and look at them, and you may say they're fine, even though I might say they're terrible because you don't know the difference. Or you may not even have the knowledge to understand what's wrong with them. This is one of these topics today that may help you see maybe what some of your bad trades have been about, or why you're not making the money you should be day trading. Again, we're not going to touch on any real strategic concepts, but the general concept here will be very important to you. Does that make sense, everyone? All right. Opening slide. You saw that in the email. Don't need to go over it. So I want to say, again, I like structure. I want to be very clear what I'm saying, what I'm teaching. So there's really 2 topics tonight, okay? So some opening comments. First of all, you can make money any time of the day, okay? I'm not here to tell you as a day trader you have to be there a certain time of the day, all right? And secondly, trading is a lot about how you're trained, your style, and your comfort level. So this is kind of a primary consideration. You know, just what are you comfortable with? When do you like being there? You may not like getting up. If you're in the West Coast, you have to get up at whatever ungodly hour in the morning and trade the market. Maybe that's just not you. Maybe you're not awake. Maybe that's one of the things you have to consider. That's all legitimate stuff. But the first concept is, what time of the day is best? And as it says here, the question about what is the best time to trade is not going to have an actual answer. Okay, it's not going to have an actual answer. I'll make some observations. I'll tell you what my favorite time of day is. I'll tell you the pros and cons of each of the times of the day, okay? And I'll shed some light on everything. But I cannot ever say to you, this is the time you should be sitting there. It all varies. It depends what you want to do. I'm a big advocate of the fact that even if you take, you know, my courses and you want to be just like Paul, it doesn't mean you have to have my favorite type of stuff. I could see a day trader wants to be there at 9:30 in the morning and be done at 10 o'clock every day. Love that style. It's kind of my style. I also see somebody who could wake up, and when I talk times, I'm always talking market time, Eastern time. Market opens 9:30, closes at 4. I could also see somebody waking up at 10 o'clock, getting a cup of coffee, strolling over to the computer as if nothing's going on, pull up charts at 10:15 and start trading at 10:30. That could be a fantastic style. So I'm not here to tell you there's right or wrong in the time necessarily, but I will give you pros and cons. But here's the real focus, is the second part of this, is whatever time you like, you have to understand how the odds change every single day. Are you aware of that? If you want to sit there at 10:30 to trade every day at 10:30 is different. And if you don't understand that, you're going to get swallowed up most of the days. All right, so the first question is, what's the best time to trade? I'm not going to answer that, okay? However, the bigger topic for discussion is, regardless of your favorite time, the odds during that time change every day. If you're not aware of this, you will not be keeping the odds in your favor. You have to learn to be able to distinguish the difference. My favorite time to trade is when I'm on the beach or on the golf course and just watching my trades, hopefully go in the right direction. Of course, they don't always do that, but that's my favorite time. All right, back to the best time in general, best time to trade. You may have a favorite time because it's when you're available. I mean, some of you, maybe you have another job, you have other commitments, you work at home, you have your own business, and you're only available blah, blah, blah. And that's great. Be happy that you have some time to trade the market. Another thing I want to emphasize to all of you is that I think that if you're free, again, any hour and a half during the day would be fine, but if you want to join us in the trading room, I focus personally on the opening hour and a half. And I think anybody who's free till 10:30, 2 days a week, you should be in there trading with us, because that's all you really need to make some extra money. That's my favorite time. But one concept I want to stress is to pick a favorite time and do not ever sit there at the screen 6.5 hours a day. I assure you that will lose you money over time, and it's not healthy. Okay, you do not do that. If you ever want to challenge me on that, I have a test for you that will prove that I'm right. When I teach, you've heard me say this a lot before, I'm sure, if you've been around, is that I don't like to just offer my opinion. Sometimes it's all I have, but I like to not only talk in fact, but to prove it to you. And those of you who've been through the class that's coming up this Friday, the Introduction to Mastering Technical Analysis class, you know, every time I go through a topic in there, I feel I prove it to you. I prove it in a way that if we were having a debate, that you have to hang your head, walk off the stage, and apologize for even being there, because there is no argument. So let me kind of prove this to you that it's bad. If you're ever sitting there for a couple hours and you're just kind of feel like you're starting to watch TV instead of looking at charts and you're not even sure what you're looking for, walk away for a half an hour. Go take a walk around the block and come back. The charts will look completely different to you. Anybody want to vouch for that? The charts it'll be like you sat down to a whole new day. You just see things differently. For one thing, the charts change a little bit. Maybe you didn't have the patience to wait for something to get to an area, so you hit the button too early. You walk away, you come back, and you go, oh, look, I didn't miss anything. There it is. So always keep that in mind. You should never be sitting there all day. Those of you in the room with me know, boy, I'm there much past 10:30, 10:45. You just feel me getting antsy, right? I start saying, I'm going to start doing more damage than good. Let me get out of here, because that's my 2 hours, the opening hour and a half or so. All right, so talking about pros and cons about when you like to trade during the day. Pros and cons, again, no right or wrong, but I do want to point this out. And all along, I will be reminding you, my favorite time is the opening 90 minutes. Like, I sit there from 9 doing prep until 10:30, maybe 11 o'clock some days. That's my favorite time. I'll come back and check sometimes, take a quick peek at lunch if I think something's setting up during that time, but generally that's my time. And whatever time you like, let me give you some pros and cons. Here's one pro and con, and that is the volatility. Now, this is not an absolute every day, but if you just take an average over the stocks we're looking at, over various times of the day, over various days of the week, this is kind of typical. In other words, early morning, the opening 60 or 90 minutes would rate a 5, lunch would rate a 1, and late day would rate 2. What does that mean? Well, it means if something moves 7 in a day, whatever, 5 that move will occur the opening 60, 90 minutes, 1 during lunch and 2 late day. Now, again, that's not an absolute. Obviously, some days we have power trend days, and it moves like 333 or 323, whatever the numbers add up to. Some days you have some late day moves. Some days there's news happens, but I'm just talking about the normal average day. If you look at your stocks, the ones that are moving, the ones we look at most of the day, most of the moves come in the morning. And a lot of times a stock moves. Some of the stocks we look at, they make a whole 5-day, 6-day move in 30 minutes. And then they just go to sleep. So pulling up your chart lunch is not going to get where you get the best movement necessarily. Now, lunch can be good for some different things, right? Next slide here, typical strategies. And again, this slide is almost worthless because it depends what you like doing. That adds up to 8? Well, what a dope I am. You're right, it adds up to 8, 5, 2, 1. I don't know where I got 7 from. You get the idea though. This next slide here is, it's just theoretical, just for fun, just mostly emphasizing the fact that depending upon when you want to trade, what time of the day, there's different strategies you're going to be looking at. I kind of like the early morning because it involves some of my favorite strategies. It involves the gaps that happen early. Now, of course, you can trade gaps lunch. As a matter of fact, the best time to enter tier 3 gaps is at lunch. That's the best time. I don't care what anybody tells you. Entering some trades during lunch is the perfect time to do it. If you know what you're doing, you know what you're looking for. Breakout and breakdown plays on mini gaps from the prior day. I like those trades that open. And any major support, major resistance, we call them the stupid 5-minute pops that happen. You know, you get that 935 reversal. A bunch of idiots run the stock up to some number and then it's a short after that. And also the opening 90 minutes incorporates the 3 key reversal times that are just huge. You would think somebody's keeping the reversal times under some secret combination and nobody knows about them. I don't know why nobody understands reversal times. They're just one of those valuable things out there. I look at them every single day in the room. We talk about them every single day. And just the average person doesn't even know what they are. And they're just, I don't know how they're kept such a good secret. It's a weird thing. Midday lunch. So the midday, often great for pullback entries via 15-minute chart, tier 3 gaps, and tier 1, tier 2 gaps may have a secondary entry type concept. Late day, you're mostly looking at late day breakouts, or if you have a power trend type of stock or power trend type of day, just playing that 5-minute chart the last couple hours into the close. I feel that there's less to do late day. There's just less to do. It's a little less predictable. I had another slide I was going to put in here, but just way too much information in here. But it was basically just kind of showing you that at lunch sometimes it can't be quite as predictable because, if you're in an uptrend going into lunch, well, if the bigger pattern is going to turn out to be a big 15-minute buy setup, boom, 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 right? Well, playing the 5-minute chart long into lunch, of course, is going to swallow you up because you're going to be going long when due. And when does that happen? When does it change? It's not always crystal clear. So I just think lunch gets to be a fuzzier time because you don't have the precision. I like the word precision. I think you have precision in the morning. I talk about moment in time type of trades. We have all kinds of trades in the morning that are those moment in time type of trades. You don't see it as much in the afternoon. These are just reasons why I like the morning the best. But again, any time can work for you as long as you do the right things, okay? So let's go on to the next topic now, which is just a ton of information I have on this. However, the bigger topic for discussion is regardless of your favorite time frame, the odds change during every day, okay? Let's look at a couple things here. Number one, the odds change every day, price extension. Am I referring to the market or an individual stock? The answer is yes. Certainly it applies to any stock that you trade, looking at the extension of the stock going into the day, noon, late day. But it may also apply to your stock if it is not extended, but the market is extended. Remember, the market is, we call it the sum of all stocks. But remember, the market is this big, hovering over everything pile of money, right? And if money decides to come out of the market because we hit a level, because a bunch of funds said let's sell, because somebody didn't like what some Fed guy said, if money's coming out of the market, right, because it's coming out, period, going somewhere else, it's hard for stocks to not fall, right? So you may have a stock you think is a good pattern, and maybe it is a good pattern. And if the money was there to support it, it would be doing good, but you pull the money out from underneath and it's gone, right? Now, when money comes out of the market, it doesn't mean every single stock necessarily suffers. Sometimes money switches from one sector to another. Sometimes money will stay with unique things. And those are what we call stocks that are on their own page. I'll talk about those in a minute. So, yes, you have to look at your stock in terms of what the right timing is, but you also have to keep this view, and I call it the market bias. The market bias is always hovering over you. You can never ignore it. Because regardless of what a great pattern you have, well, today some of you maybe experienced that, right? Today, maybe you experienced it. You had a great long trade. You never took a target and it stopped out. And you look back and you say, why did it stop out? And I bet you some of you said, oh, that wasn't my fault, the market. made it stop out. Anybody ever talk like that? Anybody ever say those words? Oh, I had a good trade, just the market stopped me out. Anybody ever say that? Don't admit it if you do. It's kind of, the analogy I have, Jack's like this one. It's kind of like, it would be kind of like me saying, I'm a great golfer. I'm a great golfer, you know. I shoot double bogey, but I'm a great golfer because every time I hit the ball pin high. I'm usually one fairway to the right, but you know that's not my fault. You know, I hit it perfectly long the right amount every time. I'm just, you know, I get one out of two things right. It's the same thing trading. You can't say, oh, well, I didn't count on the market. The market's part of what we do, and you can't look at a day like today and say, oh, gee, you know, this wasn't my fault. I didn't think the market would do that. Well, it's not your job to. It's not your job to blame the market. It's your job to understand the market and understand what you're trading all the time. Understanding the above is beyond the scope of this conversation, as well as exactly what it means to be too extended. Even the best understanding of the latter will be a little fuzzy, but these comments will still be very helpful. The topics I'm going to be into are the ultimate topics for most traders. It's not like these are yes-no answers to some of these. It's all about understanding charts, getting some experience, understanding how everything comes together. They're not yes or no answers. All right, next slide. Boy, we're not very far for 520. All right, question for everybody. So we're starting to talk about timing, you know, what things should look like. And here's rule number one. What do you think of this rule? Do you guys follow this, right? The market opens and goes red. It's mid-morning sometime, and the market is below the open and below yesterday's close. Should we be considering long trades if the daily bar looks like this? Should we be considering long trades if the daily bar looks like that? Yay or nay? Take a vote. Well, we're day trading. We're day trading. Market's underwater. Commentator comes on your news show and says, oh, market's down today. Some stupid Fed guy says something about interest rates. I'm sure he doesn't know what he's talking about. Now, when I ask questions, you know, there's sometimes where the answer is, it depends, or sometimes the answer is, you know, this is kind of my opinion. There's sometimes this guy say, if you answer this wrong, you shouldn't be trading because you just don't understand what's going on. Chart should be our guide. Absolutely, John. Absolutely, right? But before I answer that question, let me show you a couple other slides because I don't want to say the answer because I may add words to it that would offend some of you because if you get this wrong, you just don't know what you're looking at because here's an easier question for you. Bullish or bearish? Doesn't matter what time frame, just it's a gimme answer. It's a slam to what they call a layup question here. Bullish or bearish? Amuse me. Bullish, absolutely right. Absolutely bullish, right? Let's say this is an hourly chart, okay? There's an hourly chart, 60-minute chart, okay? It's bullish over several days, correct? Part of what I'm talking about here is just a simple concept. Like for me, who likes the open, the early time, some of you in the room know some mornings I'm very aggressive. Now, obviously, we have unique traits some days, but some mornings I'm very aggressive, saying, okay, you know, we need to be acting these opening minutes because this may be the high or low for the day. And some other days, I go, well, let's just sit back and wait a while. Well, what goes into that decision? It's not just a subjective thing. It's not because I'm tired or didn't have breakfast yet. It's because of the market pattern. So if this is the pattern over several days, where on this chart, let's say this is over 4 days, okay? This is an hourly chart over 4 days, right? Where did the market open and close on these days? We don't know. I don't have that drawn in there. What if the market opened and closed like that, right? That was an open and a close for that hourly chart. What would the daily bar look like mid-morning? What would the daily bar look like mid-morning? And for a daily bar, just kind of say all green, all red, topping tail, bottoming tail, BTTT, green or red. Well, what would the daily chart, if this is the hourly chart, we open here, we're going to close here, there's our pattern. Midday sometime, what did the daily chart look? Yeah, it's all green, right? What does it look like at the end of the day? Big green bar, right? There's your daily bars, right? Green, green, right? Good. What if we open here and close here? What is the daily chart going to look like midday? What's the daily chart going to look like midday? Go, 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 come on. No, midday. It's never going to be a doji. It's not even possible to be a doji. What's it going to look like midday? It's going to be all green, right? Midday from here to here. You can see my arrow, right? Yeah. It's going to be all green, right? I mean, if midday happened here, you'd have a little tiny topping tail. What's it going to look like end of the day? What's it going to look like end of the day? We open, we run up, and we pull back to the open. What's it going to look like end of the day? Yeah, we're going to have a big topping tail, right? It may be red, maybe green. I don't know. It depends exactly where you close. But generally speaking, you're going to have a big topping tail bar, right? Everybody follow what we're doing here? You seem to be going on. What if we do this? What if we open here and close here on the hourly chart? What are we going to look like midday? Midday, what are we going to look like midday? Sure. Yeah, all red bar, right? What's it going to look like at the end of the day? What's it going to look like end of the day? An undertail. Wow, that's. I'm sorry, Dirk. I've never heard that. I mean, I've heard shadows, wicks, top tail, bottoming tail, up tail, down tail. I've never heard an undertail. That almost sounds like it's inappropriate for this room. All right. Correct. You're going to have a red bar midday and a green bar bottoming tail end of day, right? So those are all the different things. But yet, do you get my point here that all of these different daily bars that you're talking about all are from the same price pattern over 4 days? Do you understand that? Right? Agree? Same exact chart over 4 days, and just where we decide to open and close the market determines what it looks like. So if you're like here, this is the question I actually asked on this last slide. If we're here and I say midday, the daily chart is red, should you be thinking long? It is incorrect to say no. Don't think long. I hear that all the time. I hear people send me trades and they say, well, I couldn't go long because the daily bar was red because we were down on the day. That's a kindergarten comment in a nuclear science class. It has nothing to do with red bar, green bar. It has to do with chart patterns. So for you to say the bar is red, do you see that you would be missing on the absolute perfect long opportunity to say I'm not going to trade a red bar in the market? Do you see this, everybody? And I'm getting old at this because I look at some of this sometimes and I think, well, this is stupid. Everybody knows this. Then I hear people talk. I see comments and I get comments after presentations like this. And no, I guess this is not blindly obvious to everybody. Let's carry that a step further and say, well, what does that mean directly to your trading? Well, if this is our chart pattern and we open here, right? If this is our chart pattern, we open here. Thanks, Ron. Right? We open right here. What are our thoughts that day? Well, our thoughts are to act early, opening type of trades. The time frame we care about is in an uptrend, right? So the general perspective should always be thinking long, right? When we're in an uptrend, the concept should be go long when we're not extended to the upside. That's the primary concept, right? So here we have this perfect opportunity to say, hey, long because this should be the next move coming up, but you know what? No time to wait. You got to get in because remember, I'm showing this straight line, but a lot of times this pop happens the opening half hour, right? So boom, act early, and you could do it for all day long type of trades, or if you're more of a scalper, you can take whatever you get from that opening run like that, right? So chart pattern like that, opening in this general area, bullish early, right? What if we're opening here in the pattern? Well, possibly some bearish trades. Remember, when our time frame of reference, this should be TOR, by the way, a time frame of reference, is bullish. The upper time frame is bullish. You really want to focus long, but I'm giving you a very simplistic, watered-down view of things, and there are times where depending upon where this chart pattern meets other chart patterns, how extended it is, and individual stocks, it's quite possible if the market opened here, I might be very aggressive looking at individual stocks short. In other words, what if a stock had a weaker pattern? What if a stock was doing the uptrend like the market and then it did this? And then it's opening here when the market's opening there. Do you see what I'm saying? That market bias to say, hey, we're probably going to pull back the opening 2-3 hours. Maybe I don't want to short the market. Maybe I do. But what a great market bias to say, find a weak stock and short it. Does that make sense, everybody? So unique shorts, and then phase two, be waiting for mid-morning, late morning, lunchtime to find the reversal to go to the upside, looking to take long from lunch to the end of the day, scalp, longer term day trades, whatever it is. What if we open here? What if we open here? What do you do? What do you do? What do you do early? If you're like there at open, and there's where the market opens. And again, notice what it says up here. It says these comments are for market bias. Unique stocks may be on their own and conform to a market bias to varying degrees. And again, that's a big topic in terms of how much do you use a market bias for different stocks. But what that's simply saying is, here's our market bias. Here's what we're looking at for the typical stock. If we didn't have something unique or weird, what would you do if you had to trade the market this day, or everything looked like the market, and you open right there? What do you do in the morning? Yeah, well, the point is that would be a good day to not do anything, Carlos. That's a good day, right, to say, okay, it's 9:30, you know what, I'm going to go get some breakfast, come back at 10:30 or whatever time you think it's going to be, right? Because you're in a tough spot there, because you're bullish, so you don't want to be shorting that late in the drop, so you just got to wait until you see something set up better, right? And what if you open here, somewhere in the meat of the uptrend, but anywhere from the beginning to the end of the uptrend? Well, as you move from A to B, the odds favor more no action, right? In other words, you open pretty close to what I call the sweet spot of the move, this opening, the opening third of it, whatever. Be aggressive long, but as you get toward the end of it, right, you're going to be topping out sometime soon. So the more you go from A to B, the more it requires you to wait, right? Depending on the setup, you may even, as you get to B, start looking for those weak stocks to short. And I want to emphasize, generally speaking, you don't want to be shorting that, right? I can't make that clear enough. You don't want to be shorting that because we're in an uptrend. You want to be buying that. But if the market is doing that, from here to here is where you would look for unique stock short. Does that make sense, everybody? 80 people here, and Harold's the only one that understands the information, I guess. Seriously, do you have any questions? I'll keep going. Next slide says, price extension of the market. Exceptions. Art has to change his underwear, or he's going swimming? That's right, John, because you're going to be taken care of. You're not going to be a newbie for long. You're John, right? John? There's so many Johns. You're John in the room recently, right? So this is all going to be secondhand John's. Oh, you're new. Oh, I'm sorry. Okay. I just had a John sign up for a seminar program who was in the room, and I thought that was you. Oh, there he is. John W, John T. I got the T's and W's mixed up. All right, got it. All right, never mind. So exceptions, price extension of the market. However, the market is a guide is not appropriate, and the stock is on its own page. Stocks can be on their own page because they are not part of the normal market, or they have a unique pattern, or most common are stocks that have gapped. One of the most common reasons for something to be on its own. So we have unique stocks like gold, oil, or something that's gapped. Let's take a look at a couple of these examples. Price extension of the market. Here's from today's charts, right? Somebody mentioned this. Actually, somebody in the room traded this. I did not trade this, to be clear, but just showing. Today, the market after the opening, right? Market moves up for 5 minutes. This is the QQQ on the left, the market. Runs up for 5 minutes. Here's some stock that gapped down, Unfi. I think that's one of those food stores. And, right, did nothing the opening 5 minutes. And then the market free falls and the stock rallies. How can that be? This is a market stock. Why did it rally when the market fell? Any ideas? Oversold is absolutely the wrong term. On a written test, I'd have to give you an F because that is not correct. Here's why, Carlos. When this stock opened down here and it gapped down 10%, 20%, whatever it was, how many traders had sold their shares, Carlos? The second in time that stock opened, how many traders had sold their shares? I'll give you a hint. You know the answer. Well, one. One person sold their shares, the stock opened there. So how can you say it's oversold when there are obviously millions of people that want to sell it and only one person sold, right? So it's not oversold, it's a different concept. If we traded from here to here, then you might call it oversold. Of course, oversold doesn't mean anything, right? Stocks that are oversold tend to get sold more, and stocks overbought tend to get bought more. Not a big deal. But yeah, it's because this thing gapped down. In other words, this has its own issues, right? Nobody, whatever you are in this stock, right? Well, maybe that's why some idiots came in, Carlos. Yeah, I would call them idiots because it's priced so low. But those just be idiots. It depends on the price pattern in general. But the point simply being, whatever it is, whether this is a good buy, a stupid buy, whatever it is, the point is it's on its own because whatever happened to the stock, nobody cares about interest rates. Nobody cares about who's talking. Nobody cares about what Microsoft said, right? You know what I'm saying? No, me either, Jay. I don't like those at all. But my point simply being, this is here just to say, look, this has its own issues, right? Yeah, not a good answer either. On another gap like this, on a professional gap down, you're going to see volume bars that big as well. But it's a professional gap, it's going to go lower. You look at any stock that gaps down, it's probably going to have big volume bars the opening 5 minutes. A lot of them drop. Look at DG the day it gapped down. Huge volume the opening minutes. Volume. Remember, for every buyer, there's a seller, right? So you can't just say, oh, look at all the people that bought it, because for every buyer there's a seller. That many people sold it as well, right? It's a balance based on the chart and what's going on, right? Yeah, I mean, there's all kinds of them, Ron. But the point being is when something happens, a stock can simply not care about the market. In other words, the traders involved. Think of it this way, guys. If you were long UNFI, or if you were short UNFI yesterday in the close, right, and it gaps down $20, 20%, whatever it is, do you care about what the QQQ is doing? Do you care what they're saying on TV about the deficit or anything? You don't care about any of that stuff, right? So anyways, getting back to what we're talking about. So exceptions, price extension, a big gap can cause something to be on its own page, period, right? Also, however, is that just a unique pattern can have it happen, right? A unique pattern. Here is CVS, right? Here's today. CVS is a market stock normally. It didn't gap today. It gapped a little bit, but I mean, not more. Actually, it gapped less than the market did up. So it's just another stock. Why did this rally today? Why did this rally? Why did this ignore the market? CVS would normally be somewhat of a market stock. Why did this not conform to the market at all? It rallied the whole time the market was in free fall. Again, market on the CVS daily on the left, 5 minute on the right. It's right up here. It's just a unique pattern. We formed a bottom on the daily chart, right? We formed a bottom on the daily chart. Wide range engulfing bar on bigger volume, a retest of that area, boom, and it just simply is taking off. It's got its own issues. It has, if you want to use the term oversold condition, you can have short covering, all this stuff going on, right? So that's another reason that it may not make sense. Price extension stock on its own page. Sometimes a gap can stay on its own page for a period of time. I call these gap carries. In other words, a stock gaps and the issues are not resolved on day one. When you gap underneath, right, weeks and weeks and weeks of pattern, all the people here long have shares and they don't all sell on day one, right? They're hoping that it's oversold when it gaps down, it's going to come back. And when it doesn't come back, what do? Well, every time it tries to rally, they sell into it, right? So a lot of times you'll see a continuing pattern. So I keep these on a list, right? Well, Jack, I agreed with your last comment. I don't agree with that comment. I mean, yes, large gaps are harder, but it depends on the pattern. It depends on the pattern. So, but what you can do, Jack, is put them on your carry list. Some of my favorite ways to trade gaps are not on day one, especially on a bigger gap, but on day 2, 3, 4. So this is actually a trade for me today, and I want to distinguish because this is a perfect example of understanding the timing and extension and everything. So I want you to look at the 60-minute chart here. I thought a little box came up here. There it is. I want you to look at the 60-minute chart the last 2 days. Everybody see that highlighted there? Boom, boom, boom. The 6th and the 7th. Got it? See that? So we had this pattern. Boom. We fell to here. On the 6th, we gapped down beneath all that. On the 7th, we opened flat. That was today. I want you to keep an eye on this. Here's the 6th. We gap below all that. I would never, ever want to go short DG yesterday. Why? Because of the word up here, extension, right? Look what happened the prior day. We fell, and then we gapped down, right? You don't short that. That's why it came back the next day as far as it did. But what about now today? Now today we go sideways all day. And if you look at here, there's a 5-minute chart yesterday, continuing into today. We go sideways all day. And now guess what? Now we are prepared to move lower from that prior gap. So this is a stock on its own page as a gap carry that's still feeling the effects of the gap. So I actually got in short of this here today. Actually, I have it spelled out on a chart here a little better. Boom. So short of this day, just showing you again, this is not just talk, this is how you make money, right? This is how you make money. So this has been on my list ever since the gap. Yesterday I noticed what it did. Today I said, last night I was kind of drooling over this, saying, okay, DG is going to be a favorite, right? So I came in here, and you see the numbers up here, DG. I did 2 trades on it, actually. So DG, number 1 at 953, number 2 at 1021. So came in and shorted right in there somewhere. And we got lucky, it dropped really fast and took half. Actually, that was the target, the prior low. Got half. And then came in and shorted again with the stop over this area in here. And then took the second half of trade 1 and the first half of trade 2 there as it bottomed. And then the back half of trade 2 trailed out somewhere up in here. You know, what a difference. Yesterday, and I know people suggesting it, they thought, boy, yesterday, you look at that and they think, oh, it gapped below. If you go back to that hourly chart here, you say, oh, it gapped below 4 days worth of trading. That's not relevant. That's one thing you look at out of many things in analyzing a trade. To simply say that again is kindergarten talk in a nuclear science class. Gapping under 3 days of trading does not mean anything without a whole pattern. It was extended going down into that. Didn't even look at it yesterday. People in the room with me, I mean, they, you know, if I was lying, they'd be telling you. Boom. So there's DG. Next thing on our list here, I'm doing okay on time. Another example. Now, this is not a trade for me. This one was not a trade. It was just a chart that I had on the list today. I noticed I didn't do it at the right time. MNST. So this thing, this is, I don't have the daily chart here, but this was a big lower high on the daily chart, obviously, right? And it had this big breakdown this day and then came back like this, right? So here's today. This is today's hourly chart, right? So everybody, quick quiz question. Here's today's hourly chart. Here's yesterday. We gapped down beneath yesterday's pivot, right? So we gapped down to here, and I want to get short as fast as I can once it turns red again, right in the right. It came down, a little tail, and then it rolled over. I want to get short in there as fast as I can, correct? Gapping under the hourly pivot, correct? Well, would you want to get short? A gap below the prior day, would you want to get short in here? Again, this is one of these. This is not a matter of opinion. This is not a matter of trading style. This is not a matter of, you know, blah, blah, blah. The answer is absolutely not. Absolutely not. What support level are we hitting? You mean over here? Mike, that's almost all I do in presentations is bait people. You're absolutely right. But I want you to understand why. Why not? Yes. Because look at the hourly chart. The hourly chart is your guide to extension. Somebody asked that earlier, okay? It's your total guide. Look what happened. Free fall. What is a moving average good for? When the moving average is crossed, you should short the stock. That's stupid talk. The moving averages are your guide for extension, your guide for uptrends and downtrends. When you're looking like this, there's a lot of different ways to judge extension, and just because it's, look what it says down here. Just because it's extended doesn't mean it can't drop, and just because it's not extended doesn't mean it has to drop. It's one of the things you look at. And the point here is, with this as a guide, I would never short weakness. Art, every day in the room, when we look to short or go long, it's in one of two categories. What do? We either short blah or short blah. What do? Right. Every day in the room, we make a decision if we're going to short something. Do we short weakness, catch it as it's falling weak, or do we wait for the rally back? This stock here, you absolutely wait for the rally back. And I don't care if it would have dropped, I would never go after it, because here's what happens. This is going to happen to you most of the time. It's about playing the odds. Go chart. And here's what's going to happen to you. Where's the go? There we go. That is expected. That is what you should see happen. The little head fake down, because you're overextended. Again, this is a subjective term. It involves a lot of things. But it's not subjective to look at this chart and say I would never short that, right? You know, Mike, you can't make money scalping if 5-minute bars go against you, right? I mean, nobody's scalping 42 seconds, right? I mean, I'm sorry, people are doing that, but most of us aren't, right? So, I mean, the best way to scalp is if it moves 3 hours in your direction, right? Then you can pick anywhere you want in that 3 hours and you're going to make money, right? But if you happen to scalp long, the minute it dives lower or whatever, you're not going to make money, right? Okay, yeah, all right, there you go. If you're making good money like that, that's great. If you're struggling, it's a tough business to me doing what you're doing. So MNST, boom, that's where you would short it then. And oh, this little bar doesn't disappear. It fell from here. Now again, this is not a trade for me. I didn't do this. I didn't do that. I'm just showing it was on the screen today. I was looking at it. I was considering shorting the rally. After this green bar just fell into the abyss, and I was doing other stuff, so I never bothered with it. Okay. But again, the lesson here is about extension, about what would you do, what would you not do, when do you time, how do you time things. When you see MNST this morning, you do not short early, you do not short weakness, you wait for the rally back. I want to emphasize again something that what I'm showing you here today, and I don't want this to sound bad, but this is Mickey Mouse stuff. I mean, this is simple stuff. This is just ABC of basics concepts you should follow. This doesn't even touch on what I teach in the seminar programs. I just want you to understand this is not like the secrets to trading. This is just one out of 100 other examples I do here when I do these presentations, just showing you things that you should know in part and parcel with everything else. But what do you trade? When do you trade? What is extended? How do you find mini gaps under this and all that? That's all part of what I think you need to learn if you want to be a successful trader. Learn it on your own. Study the free stuff page, find a mentor, learn from me, whatever you want to do. But if you're not successful after several months of trying, try something else. Proper extension, PFE. So actually, it's kind of funny. This presentation to do it came in my mind because of PFE, because I had a discussion with one of the members in the room, Pierce. I don't know if he's here or not. And I said, you know, this is a great discussion. And it actually, like I say, I have a whole list of presentations for future presentations, and this one was on the list, talking about timing and stuff. And I said, what a great thing. And it turns out that this is kind of one of the least meaningful charts to me right now because of all the others I have, but this is a great topic here. So here's the daily chart of PFE, and we're looking at during this drop over this 3-4 days. So you kind of have this big engulfing bar. Yeah, this is kind of threading the needle. I don't think PFE makes a new low on the daily chart. I think that's the bottom. I think it goes higher. I haven't even looked at it today. I don't know where it is while I'm saying that. But you have a couple, 3 days here if you get setups to maybe short on an intraday basis, right? Because you're probably going to retest this low down here. So here's the hourly chart, and I just want you to notice here. So here's day 1, here's day 2, here's day 3, here's day 4. And I want you to look at how each of those days is uniquely different. I took a trade on one of these days. So I did a really neat thing here. Here's the hourly chart on the 25th, right? So this is the first engulfing bar down. You wouldn't be short that, or I wouldn't have been. So here's the 25th, right? So the 25th, in my view, you could have been we were very extended from the prior day, but it's an engulfing bar. If you didn't short very quick, I would have waited for a rally that day. But the point is, once you start falling, you're not shorting the rest of that day. It's too far gone already, right? So I wouldn't be touching that. The 26th, I did not trade it the 26th. It was on screen, I think, or I had it somewhere. But this is what I mean by shorting a rally. You would not want to short the 26th because you still have this extension here. You have this extension here visually. You have it here on the moving average. I wouldn't want to short weakness that morning. But shorting, this is what we call, what kind of pop do we call this in the room, everybody? That morning, what kind of pop is it called? Starts with an S, ends with a D. Well, yeah, that's not really the pop and drop. No, that's an entry. But the stupid pop. Just the stupid pop, right? The idiots coming in to buy this. And by the way, 9:35 reversal time is one of the key reversal times. It works phenomenally. It's great. And this is a 9:35 reversal time type thing. So people come in here, boom, opening is actually the 15th minute. So 15 minutes into the day, boom, pops up here. But it's going to catch all the selling from people who were still stuck in here from this big red bar. So that's it. Now, this is a tricky one to do this day. If I saw this, I wouldn't have done it. But this is the way it works, though, is that when you have extension and bearishness, You wait and you short stupid rallies like that. But I did trade it this day. And this is the day we had the debate about it because it really wasn't ready on this day either, unless you got in early. So I did short it this day. I got in not really early. It wasn't the best entry. It was it was on this rally back. You see this? Because I had what I call a perfect entry. I had the little 1 minute retesting sell sub. So I got in right in here. Whoops. Right in here somewhere, wherever it was. Wasn't the best entry. But if you short the top of the sideways base, you're always going to be okay, right? I always say if you short the high of the day, you can't lose money. So I shorted the high for the rest of the day. It never dropped. It never fell apart. So I made a little money. It trailed out. It's not a great trade. It's just simply saying, hey, it could have dropped that day. It didn't drop, but with a great entry, you still make money. Understanding I would never want to chase it. And I guess one of the points I had that day was, I think it came up as a topic, I would never short that new low. That would be insane because now you'd be shorting the low of the day because you should expect it to start going sideways at some point. So I got in up here. I think shorting here was okay, shorting here was okay, shorting here was okay. But none of them made great money. It was just a little tight range that it stayed in. But if you short the top, you're always okay. When you short breakdowns, half the time, when you short a breakdown, what happens to you half the time or more? Even if you're good at breakdowns, what happens to you half the time? You short the bottom of a base, and you're immediately underwater because it comes back to the top of the base, right? One last topic, and amazingly, I'm right on time. Oh, maybe there's two topics. I don't remember. And this kind of refers to today. And I threw this in here because it's kind of that same topic that we're on. And in the letter today, I put something that I always say. If you go back, where's my pen here? If you go back in here somewhere, right? The daily chart's fine through here. Daily chart's fine in here, a little pullback. But up in here somewhere, the daily chart is getting to be what you would call extended, right? However, during that time in the daily chart, here's the hourly chart. As long as one or the other is not extended, you can play it, provided you have a setup and all that good stuff. But I mean, you're not prohibited from playing an extended daily chart if the hourly is not extended, and vice versa. You're not prohibited from playing an extended hourly if the daily is not extended. So even though the daily got extended at some point, there's great hourly setups here. I would not mess with the hourly chart up here because you're kind of doing this pattern through here. But right through here, this is great. You know, even though there, the daily was up here and seems extended, the hourly chart is still great, right? Could you have, what's the prognosis for this right here? It still be long. It's fine. However, when the daily is extended, the second the hourly chart breaks its stride, then the hourly chart is toast, and now you expect to pull back to the appropriate. That's how you know when to go back to the daily chart for your support areas. For those of you who get the daily letter from me every day, you'll see that there's support areas in the daily chart, support areas in the hourly chart. The hourly chart holds until it doesn't. When the hourly chart falls apart, boom, there's your next target area to pull back to the daily chart. So that's what we saw today was the hourly chart broke on an extended daily. Daily's going to pull back to the appropriate area. It's not rocket science, but it works pretty well. Questions, anybody? This is a busy week, Friday. I invite you to all, I'll get your questions here. For those of you going to leave, Friday, come join us for the Introduction to Mastering Technical Analysis class. This is free to all free members. If you're here today, you can be here for this class. If you've never been here, come to this class. It's the first course that's part of the seminar program. The seminar program starts Saturday, the live classes. Remember, for the seminar program, there is a home study. You can start anytime. Most people still start with the live classes. Live classes start this Saturday and then go. Actually, there's a little interruption. We're going 3 of the next 4 Saturdays because I have to take a weekend off somewhere. So the Saturday classes are paid for, but Friday is a free event. It's the first part of the seminar program. Everyone's invited. I guarantee you there's great information. You haven't been through it twice. Come through and sit through it, okay? Swing trade question, and you'll get invites to that probably tonight or tomorrow morning. Swing trade question, lift on daily, 8 green bars up and a major resistance today. Doji, does that end the uptrend? Weekly says stay long. Well, actually, that's what purpose are you asking? First of all, a doji is a meaningless term, Andrew, in case you didn't know that. A doji doesn't mean anything at all. I'm not going to pull the charts up for everybody because this can be kind of a pain. I don't have them set up here, but Lift? Oh, lift. Um, yeah, you definitely have a resistance there. I mean, I guess it's what purpose are you asking? I mean, if you're long, I'd be selling absolutely. If you're long off the bottom, I would even consider shorting that, but it would be for a 2 or 3 day pullback probably. Yeah, it's the resistance on this that matters. You're into a good area for resistance here, yeah. Not a great one. You ate up a lot of that on the way up, and you're going to probably just have a day or two pullback, right? Thanks, Mark. Mark, when people are ready, they come. That's all it is. That's why you don't see me pushing stuff or sales or whatever. It's just, hey, when they're ready, they're ready. I think I've shared this with you guys before, but one of the reasons I encourage you to try and learn on your own, there's two reasons. Number one, I'm willing to help you. Number two, you have the free stuff page is the greatest source of free information for anybody. Anywhere on the internet, I proclaim this to be the greatest source of free information out there, the best source of free information. But the other reason, Mark, is that people learn better when they kind of give up on their own, right? Whenever they think, oh, I can figure this out, they're very hesitant. They think, because I was that way. You know, I tried to figure it out years ago. And I don't know, when you go to YouTube, it doesn't show it to me, Mike, because I own the page. But I mean, somewhere in there it says subscribe. No. I just gave you the link to YouTube up there. Well, if you're on the home page, on the left, it says YouTube. Click on YouTube. And when you go there, somewhere it says subscribe to this channel. Somewhere, I don't know where. Do you have any advice on a scalper transition to longer trades? I usually choose my trades in minutes. Yeah, Ron, there's nothing to transitioning at all. If you understand technical analysis, Ron, here is, let me go to that because some white on it. Here's a chart, Ron, right? Understanding the implications of that chart is what matters. And whether that's a 1 minute chart or a 500 tick chart or a daily chart is irrelevant, right? So all you have to do is just change your thinking. And I have to tell you though, Mark, it's very hard from a mental point of view, because I've worked with people who's coming from scalpers and they have a hard time, not taking profits on a scalp basis. I have somebody I kind of argue with this about all the time. Here's an hourly chart, right? Here's an hourly chart. So I get in here, I find something I want to short, boom, I short it, and there's the end of the day, right? So in my view, if it's going to get there, I want to get all that move. It's a 5-hour move, a 4-hour, whatever it is, right? And I'm looking at that chart. Now on the way down, guess what's going to happen, right? If you take and explode out that hourly chart, well, your 5-minute chart is going to start off on the way down. You know what's going to happen in a 5-minute chart? It's going to go up a little bit, and then it's going to fall, right? And as a scalper, this is why you have to make your time frame you're trading, right? Because what's going to happen to you, I forgot who I'm talking to, I'm sorry, but you're going to be out here because you're saying, I can't live with that. If the 1 minute chart broke a pivot, I can't live with that, right? But no 4-hour move does this, right? I've never seen a chart do that for 4 hours, right? On the way down, you fall, and you rally back a little bit. You fall, you rally back a little bit. And if you're down to a 5 or a 1 minute chart and you're trading 4 or 5 hours, you're going to have broken pivots in lunch, and you're going to do this, and you're going to do this, and then you're going to do that. And you're back and you say, well, why did I get out up here if I'm changing it? And that's what people have a hard time with, right? So, I mean, a lot of really changing, there's nothing to changing charts. You just do it. It's the same chart, whether you're scalping or swing trading. But mentally, you may have a problem, right? I may throw this out there too. I mean, why are you changing from scalping? Oh, because you're missing moves, you said. Okay. Well, that could be a good thing then. You're picking good charts and you're missing part of the move. Well, of course, Ron. There are a set of 3 trading gods that look over the screens. And one of them is in charge of screwing up your exits. And anytime you get out, that's when the stock rallies. It's one of the rules. Just happens that way to everybody. But seriously, understanding where your targets are doesn't matter what time frame you're at. See, if you're scalping, Ron, and you're scalping inside of a bigger picture of power, you may have a scalp entry that, this is what I mean by when I talk about having a moment in time entry, Ron. In other words, theoretically picture a daily chart bottoming out, okay? And what if on that first bounce on a 5-minute chart, you found a scalp entry, right? You could theoretically, Ron, do you agree with this? You theoretically could be entering a scalp trade that could run for 4 days, right? Theoretically. If you got in at the birthplace, right? Do you agree with that? I mean, it's not easy. It wouldn't happen a lot, but theoretically, if you really knew the charts, that's what could happen to you. But conversely, if you entered, why not? Well, I don't know. I don't even know what ODT is. I know what's ODT? Overdone time exposed spiders. Okay. All right. Well, even end of the day, whatever it is. But I mean, point being is you could enter on a tick chart, and you could be entering a low of the day run that goes the entire day, right? That's my point, is what it is. So if you understand the bigger time frames and multiple time frame correlation, which to me is the single most important thing in trading, if you understand how the time frames come together, and you find those moments. You could, if you watch me trade, you may think I'm a scalper the way I get into stuff. Because I'm often using, well, I never have a tick chart up, but I'm theoretically using a tick chart to enter stuff sometimes, but yet I'm holding it for 4 hours. So that's what I try and do, is find those moments in time. But naturally, the reverse can be true too. If you enter something that is a bearish setup, but you enter bullishly off your tick chart, but the bigger time frames say, no, you're not going to go very far. So you have to understand the bigger time frames, and if you're possibly set to go higher. But then there's always the question of, how much of a pullback you're willing to live through, right? Let me, I missed a whole bunch of questions up here. Let me go back. The drunk walk, it seems like, okay, that was Ron. Mike, I'm pretty excited to do your course, 2 months max. So I have to, okay. Yeah, well, you have to do about, about 6 of those, Mike. 6 smash and grabs. All right, anything else, anybody? I finished on time, took a couple questions at 6:06. Good talk. Thanks, Zen. All right. All right, see you on Friday, all right? Friday.